the feds yesterday seized Signature Bank. They are heavily connected to crypto transactions. They're gone. So we've lost Silvergate, Silicon Valley, oh my God, Signature Bank, Silvergate, Silicon, Signature, and then a whole bunch of other regional banks were really shit in the bed today. So, there's like 70 bank stocks that got halted. So, so I listened to the radio all the way from Seattle through Canada, did NPR, then CNBC. Every single person they brought on, whether it was CBC or NPR, was like, they got it contained. There's nothing to worry about. This is an isolated incident. Other banks don't have this issue. Bullshit. If Silicon Valley Bank didn't realize locking up all of their customers' deposits into long-term low-interest bonds was going to implode them, that means other banks didn't know that either. So it's all coming, man. It's all coming. There's going to be a ton of movement into really large banks, which is going to just doom things even more. We see that these default swaps for Credit Suisse are just at highs unheard of. They've had to delay their reporting. Every major bank has failed the stress test. Bank of America failed. Wells Fargo failed. JP Morgan failed. Goldman Sachs failed. It's going to be nuts. On Marketplace, they were discussing the raising of interest rates, and some were saying that now the 50 basis points is probably completely unlikely. Like, oh no, they can't raise interest rates now that these banks are collapsing. But what if the CPI report comes out tomorrow and it's up, right? What do you do then? Like, yeah, banks are failing, but we still need people to not have any money to spend, is basically where they are. So my butt's very sore. I've got like four pillows on this wood chair I'm sitting on right now. Dean Martin, like the Dean Martin. What'd it be like? Ready for my MMTLP payoff like yesterday? Me too, man. Grape Houston, do you think it's a good idea to exit all my longs and buy back at the bottom? Also, are you into the NBA? If your longs are outside of meme stocks, they're going to go lower. Not financial advice, I'm not a financial advisor, but the market is now set to actually fall. We are now in the beginning of it. We had last week, before these banks collapsed, we had several financial news networks and articles about, hey, shit's going to get real in the next 60 days. The odds of a financial collapse are here. It could be like Bear Stearns, where we've got some banks implode and the real drama doesn't happen until September. But I have a feeling that there's a lot of comeuppance going on right now. These debt swaps, bullet swaps, equity swaps, you name it, combined with the fact people aren't buying homes and can't sell them, the home values are going down, means that there's a lot of bad things that can go wrong. So, blue chips, they'll go. I mean, they'll bounce back eventually, but they're going to go down for now. Everything's going to go down. And am I into the NBA? Not really, since the Sonics left. And I really followed closely at all. I don't think I've watched an NBA game in a decade. I've seen highlights here and there and go, oh, good job. But Sonics leaving really left a bad taste in my mouth, and I just didn't watch the NBA after that. So, Dr. Mendes, hi Houston. Does Acme have more or less a chance now that the government threw the Silverbank doggy a bone, saying, look over there, boy? I think they've got a chance no matter what. Remember, they're funded by the Canadians. They're fine. If if I click on this, can I make the, oh, I can't make a scroll. Okay, let's make scroll the keys. So much easier since I don't have a mouse here. Ideas Matter 7707. Hey, Houston. Tony Twits says the government should offer up some hedgies so they don't go shorting banks. How can that help or hurt MMTLP cause? Will it get us trading faster or debt crisis? I mean, I'm all for murdering hedge funds in general. Like, just get rid of them. Fantastic. I love it. I don't know if the government offering them up would do any banks any service, simply because the banks are the ones who lent the money and thus have the liability. So it would be basically the government saying, we're going to blow up your banks. You can blame us for it rather than your bad bets. I think letting it happen naturally is probably the best way for the bank to realize the error of their ways, personally. That's the way I see it. And anything that destroys hedge funds will help us in any of the stocks we're in. Aaron Sound Team, Moas is near with banks falling apart. I agree. We are definitely stepping in it now. Homer's goes, Houston Wade, beans. Beans? Michael Steegs. Hi, Houston. Can you tell something about the relationship between phase 6 liquidity problems at banks and brokers? I don't know if these are particularly related to the liquidity problems in general, or I think this particular crash is due to these low interest loans not being worth anything. I mean, imagine you're a bank, right? And you have $100 billion in Evergrande bonds, right? They're not worth shit. You're not gonna get paid for them. So they're worth less than what you paid for them. Poof, money's gone, right? Got to write it off. Well, if you are a regional bank and all the money in your bank comes from depositors, then you got nothing you can write off. You write it off and you're like, well, we don't exist anymore. We're done. How these phase 6 requirements will hit banks, I don't quite know yet. Supposedly, the 6-month sort of window for them to get their shit in gear ended on the 1st, and it may be some days before we see margin calls and stuff on them. And even then, if someone gets a margin call, does that mean the prime brokers got the balls to liquidate? That's a big question, because we know what Archegos has done. Just a single middle-sized family fund has done to Credit Suisse. And I think every bank has seen that as like a, oh shit, what did we do type situation. And they're just going to let it run until that die comes up snake eyes too many times in a row. Tremendous. Dave Lauer said Fed will now lower rates 75 basis points this year. Print to go burr. Would this cause uncontrollable inflation? Yes. If they lower interest rates, we are so screwed. Absolutely screwed. I mean, the best they could do is nothing. Or no, I should say not the best. They still need to raise interest rates. But they should probably, at the bare minimum, do nothing. Go, okay, we're not going to raise or lower. We're just going to keep them where they are. And the market will be okay with that. If they cut interest rates, the market goes green. That means the crash is going to be that much worse. They can't lower interest rates. The CPI report is going to come out tomorrow. It's going to show inflation is still raging. And then if they cut interest rates, then the April inflation report will just be absolutely bonkers. So don't. Yeah, I don't think it'd be a good idea. Kirk Wilson, Houston, please explain the dynamics of the plunder protection team. Exactly where they get their cash, what type of securities, stocks, bonds, ETF do they purchase, how they keep the market afloat. Kirk, the specifics of it are kind of shrouded in secrecy. What we do know is that currently the Federal Reserve is sitting on I think it's $8.8 trillion in securities. And these are a mixture of stocks, bonds, mortgage-backed securities, other derivatives, and that. Where they get the money from? They make it. They invent it out of nothing. They trade treasury bills with holders of these things, and they purchase them. Treasury bill, $1 treasury bill is worth $1 in stock or in cash, and then they just, okay, you got some treasury bills, you can redeem those later for money. And that's what they do. So they just print it. They pull out of thin air and print it. Ronnie E92, banks are going to get rid of risk management because what's the point? Well, I was reading that the compliance officer, the risk management officer for Silicon Valley just got hired. They went like 8 months without one. And they just hired one last week, and then the bank collapsed. So I'm not going to blame her because she's like, okay, let's just load up these books, and it's gone. Okay. If you'd hired me back in August, I might have been able to tell you to fix a couple of things here and there. Oops. If our goal was to crush inflation, the best thing the government should have done is inflict pain. And you inflict pain by going, well, anything over 250 in the account is gone. Oh, well. It would have killed a whole bunch of startups, would have laid people off everywhere, would have brought down the economy in such a way that inflation will just vanish. What they did, I think, is they delayed the inevitable. I mean, they kept, we need entrepreneurs, we need businesses being started, we need lots of this stuff. So, they kept people employed, which helps them, but it's going to hurt. And it's not going to help our inflation problems in the long run. Maybe what they should have done is done case by case basis. They should have had some arbitrator arbitrarily look at every single startup that's in there and be like, that's a dumb idea. No, that's an okay idea. We'll let you live. That's a dumb idea. No, that's a good idea. We'll let you live. That's okay idea. We'll let you live. Oh, that's a really dumb idea. Let you die. Maybe they should have done it that way. Been like, you're not getting your money back. That was a really stupid idea you had. They should never have funded you. And just go from there. Not my name. Happy birthday, Houston. So if Biden stepped in to help 2 banks, what about the others that are also down 50 to 7%? Well, all of them need this special bank thing. Depends upon if they've had runs on their banks or not. If they haven't had any runs on their banks and their stock's down, they're probably fine as long as they didn't put all of the depositors' money into low interest long-term bonds, then they're okay. But if their stock is down and they put all their money into low interest bonds and they're having runs on their bank right now, then they're screwed. They will cease to exist as well.